80% of buy-to-let lending is now made to SPVs. Why is this phenomenon taking place? Why this shift from personal ownership to SPVs? By the end of this video, you'll know exactly why. SPV stands for Special Purpose Vehicle, which is essentially a limited company set up exclusively to hold and manage investment properties. Now, back in 2016, the government introduced something called Section 24, which basically abolished all mortgage interest tax relief, meaning that you can no longer offset mortgage interest against your tax liability. This is why we find in the newspapers plenty of landlords selling up. They're selling their personally owned buy-to-lets because no longer are they profitable. Now, the key consideration here is that for high rate or an additional rate taxpayers, the tax liabilities now for personally owned buy-to-lets have shot through the roof. But for personally owned buy-to-lets for lower rate taxpayers, the situation hasn't really changed too much, and the impact has been quite minimal. Now, the good news is that via an SPV, Section 24 doesn't apply, meaning that you can offset not only 100% of mortgage interest tax relief, but you can also offset all of the expenses, such like legal costs, product fees, broker fees, expenses to the property if you're looking to modernize, all those sorts of things, which is why for high rate or an additional rate taxpayers, SPVs are the go-to ownership structure for property investing. Now, there's two sides to any SPV application. Now, the first is looking at the directors and shareholders, and the second is the property side. So let's start with the directors and shareholders. So essentially, the first half of the application is the lender asking a very simple question, which is, are we happy to lend to the underlying directors and shareholders? Now, of course, a company's house search will be carried out, which is the very first thing that limited company lenders do. As long as the structure of the company, meaning it is set up as an SPV, it has the correct SIC codes. SIC codes I'll note in the comments below, so you can check those out if you are looking to set one up. And there aren't too many layers. As long as it fits within the policy, then they'll start underwriting the application and looking at the director side of things. What are they looking at on that side? Well, they're looking at, are you a homeowner? Do you have good credit? Are you indebted too much? Do you have surplus income? Does your profile meet the policy at the lender? Is the lender going to be happy and comfortable lending to you? Once you get a tick in the box on that side, it moves on to the property side of things. Now, here's where things get a little bit more complicated. So from a broker's perspective, we can control, obviously, the first half of the application. We understand the policy and the criteria, and obviously we will understand your background, so we'll be able to place the application correctly with the lender or lenders who will accept the application based upon your specific background. Now, from a valuation standpoint, we're at the mercy of the surveyors. Essentially, the lenders, they're looking at the property in the area that the property is located. Does it have strong rental demand? Is it habitable? Are they happy to lend on it? All of those questions are answered via the surveyors. Now, for every SPV application, whether it being a remortgage or a purchase, a surveyor, so a physical valuation will be carried out via a RICS qualified surveyor, which is instructed and carried out via the lender. Thinking about investing via an SPV? Book a call with me at my brokerage, SPV Mortgages. Just click on Let's Talk. So here's where things get really interesting with SPV mortgages. Now, on the personal side, we've discussed obviously the tax liabilities being much higher if you're a high rate or an additional rate taxpayer, simply because you can't offset all the mortgage interest. Now, there's something called rental stress tests. So that is a formula that all the lenders have that calculates how much you can borrow based upon the underlying rental income generated from the property that you found. Now, if you are looking to purchase a property in your personal name and you're a higher rate or an additional rate taxpayer, the rental stress test is far more strict than it is on the SPV side. What does this mean? It means that on the SPV side, you can borrow a lot more money than you can on the personal side. When sourcing an investment property, you should be looking at both the property and SPV mortgages combined. But how do you do that? Rightmove and Zoopla, they don't offer any mortgages. And certainly on those platforms, they do have links to the likes of Nationwide and NatWest, but they haven't automatically calculated what mortgages you can apply for based on the properties that you're looking to purchase. At the BToet Platform, though, which has literally been built from the ground up specifically for property investors, we give you access to SPV mortgages with property in real time. None of the data is scraped. It's updated every time you log into the platform, and it's completely free to start. Not only that, all you need to do on the platform is tell the platform how much money you have to invest with and where in the country you want to invest in, and the platform calculates everything else from deposit requirements to stamp duty to legal fees, and it will shortlist the top 10 limited company SPV mortgage deals you can move forwards with on that specific property. So SPV Mortgages is a growing space. It's been growing for the last 5 years, and what we've seen in the last 12 months is high street lenders getting into the space, which is doing wonders for pricing. Competition is obviously increasing in regards to the number of lenders and the number of products. And as competition increases, what we tend to see is interest rates and fees decrease because lenders are looking to grab market share, which is a great thing for property investors across the whole of the UK. Now, if you're a high rate or an additional rate taxpayer, the SPV ownership structure could be the most tax efficient and allow you to grow your portfolio at a much more rapid pace than owning property personally. Best advice, obtain tax advice before making any investment decision. Now, if you're interested in understanding and learning about what our savvy clients are doing in 2024, click here. If you haven't done so already, please subscribe and turn on notifications so you never miss a video. Thank you so much for watching, and I wish you the very best with your property investments moving forwards.